Welcome guys to the daily market wrap for the 28th of July. Overnight on the IT front, Jack, some of the bigger chip makers sold off, certain equities falling down despite more earnings will be released this week, specifically Microsoft, Meta, Apple and Amazon. Can you tell us a bit more about what the impact will be going forward with this sell-off?
Yeah, what we've been seeing is, like we mentioned last week, about these big tech companies being able to justify their AI capital expenditure and basically just the money they're pouring into building out their infrastructure. Are they actually going to get those tangible returns? Last week, Alphabet and Tesla kicked off the Q2 earnings reports in the US, and despite increasing revenue, they said they're also going to increase their spending on AI, which investors have basically flipped the script and showed they really don't like that. They're yet to see the returns justify the means. So those two companies came off quite substantially. So that's been weighing down on the index, on the chip makers, which are fueling this AI infrastructure. And what we're going to see this week is, like you mentioned, some more big tech companies releasing the earnings reports. So now the pressure is on them to be able to show that they're producing the returns that investors are seeking now. And this is all within the backdrop of falling oil prices this week, which you would expect to boost equities, but that hasn't been the case.
And back to the conflict in the Middle East. So there's been some further talks with Trump indicating a possible diplomatic talks. Didn't seem to be anything that we haven't really heard before, yet there was a very huge impact on oil, probably larger than we have seen before. Is this a sign of investors' optimism around this and how they may be potentially biased in one direction?
Yeah, I think that's spot on. I think basically investors have been looking for a reason to be optimistic, just given how much of a bull run there's been the last couple of months, and they've kind of seen this conflict now as a bit of a blip on the radar. So they're looking for any reason to sort of change the tune and look for reasons to be positive. I guess the reason it was so big is it seems like other nations are starting to step in rather than the US and try and take control and actually make some progress. So Oman, which is one of the big players in the Middle East, have now stepped in and are dealing directly with Iran to open up the Strait of Hormuz. So there's three channels in the Strait of Hormuz, and basically the middle channel is where all the mines have been placed, which has basically been cut off since the start of the conflict, and Oman is trying desperately to open that back up. So they've taken the lead and basically forcing the hand of the US to sort of cease the attacks and start supporting. There's now also verbal support from European nations like the UK to step in and help clear that channel of any potential mines in there. So yeah, nations are starting to work towards freeing up those passages for the commodities, and which is why the oil price has really come off significantly, as it looks like supply could increase very shortly.
Okay. And some of the big tech giants are launching some more AI safety initiatives to prevent hopefully prevent further cybersecurity attacks. Would this have any impact on the sell-off that we saw as well?
Yeah, I guess this is just another page in the AI story, and it's another thing investors have to be wary of. Is it's all well and good to be growing this infrastructure and the potential earnings that are on offer, but there's also the downside. You also open yourselves up to these cyber attacks, which could crumble businesses. And we saw last week that OpenAI was able to get out of a controlled environment and start attacking another firm. And basically that firm wasn't able to use US AI to hold off the attack because it couldn't distinguish the defense from the attack. And it had to resort to using Chinese models to be able to halt that attack. Which has forced the hand of some of these AI companies to sort of come together and create this initiative to strengthen their security protocols and security measures. So it's obviously a big development in the AI space, and it's something investors have to be really wary of when we're looking at these big AI spends.
Yeah, so something that may potentially slow that growth a little bit. Yeah. And a fundraising event today with the RBA governor. What are the sort of conversations that are going to be had today?
Yeah, it's interesting what traders will sort of look at to try and find an edge in the market or see where the market's heading. So RBA Governor Michelle Bullock is speaking at a fundraising event today, and the event itself is unremarkable, but investors will be looking for any hints about where inflation sits and where the possible interest rates are heading for the rest of the year, with the important fact that our CPI data will come out tomorrow, which is our key inflation measure.
And oil, yeah, which we've spoke about. A bigger move than we've seen with kind of similar announcements in the past.
Yeah.
Anything more you want to add with this?
Oh, not really. 10%, a very significant move, no matter what symbol you're looking at. And it's just a good illustration of, you'll hear risk talk about a weekend gap and potential rollover trading that investors or traders will look for. This is what it actually looks like, where you can see the price has gapped down quite significantly on the chart, and traders will sometimes try and exploit this pricing sort of mismatch.
And the JER 40, so sort of large manufacturing sector. We don't often speak about this one very much, but tell us what's going on here.
Yeah, just interesting to see that on the European side of things, their equities are actually going pretty well at the moment, led by the German economy. They've been seeing some good economic numbers the last 3 months. One of their massive companies, SAP, had a really good earnings result last week. Their share price went up nearly 10%, which is a big software company. So yeah, on the European side, they're actually doing pretty well with their equities compared to what we're seeing out of the US.
And the pound dollar, the pound Aussie dollar.
Yep.
Starting to come off a little bit over the past few days.
We've been seeing the pound Aussie has been in a bit of a downtrend so far this year, but it did tick up last month and was sort of sitting at highs for the year that we haven't seen since January. But the last 2 weeks it started to come off a bit, came off even more yesterday. Again, the Aussie's a risk currency, so when risk sentiment is boosted, investors are willing to take on more risk. The Aussie will get a boost, and that's from the falling geopolitical tensions. And then also we've spoken about the new PM coming into power in the UK. Investors are a little bit wary about his fiscal policy. He seems pretty loose on that, willing to spend money, which always weakens the currency.
And over to Japan. So we've spoken about the yen a fair bit in the past, but tell us about the Nikkei index here.
Yeah, so the yen's still sitting at incredibly high levels, which will sort of put a pressure on equities. And Japan's also a big tech sort of exposed index. A lot of chip makers, a lot of software coming out of Japan. So we're going to see it sort of largely be correlated with what we see in the US. So yeah, fair bit of volatility given everything going on. We've also got a US Fed rate decision this week, along with a Bank of Japan rate decision this week. So that's why we're seeing it pretty choppy.
And across to the Nasdaq, sort of tying in with some of the things we've spoken about earlier, had a pretty big bullish run for a while, and now starting to just come off a little bit on the back of some of those announcements and other bits and pieces.
Yeah, like you would have been aware, and we've spoken, it seems ad nauseum, about tech's been on an absolute tear this year, but the last couple of weeks has been coming off, and we can see it's consolidating into that descending wedge, and we're kind of about to hit a key inflection point where it will either continue falling or it will go on that bullish continuation and sort of break out a bit further. And I guess the key catalyst this week will be those big tech earnings reports that we spoke about earlier, and then also the US rate decision. Importantly, what the language is around that and what the outlook is for the rest of the year. does the easing of tensions this week ease concerns around inflation, which is sort of the main point that Fed Chair Kevin Walsh will be concerned about. So if he thinks inflation might ease as the conflict sort of unwinds, that could turn the Fed a bit more dovish. If that happens, the Nasdaq could continue on its bull run.
And to wrap up the article of the day, just some more information about those top fintech companies.
Yeah, this just looks at some global fintech companies, looked at over 3,500 and sort of had a look at the leading companies in different aspects of fintech. So it's just an interesting article if you sort of want to see who's performing well and sort of what areas of fintech are front of investors' minds.
Thanks, guys.
Thank you.